Well, hello there, ladies and gents. Great to see you again. Welcome back to Advance Your Wealth with Homer Smith. I'm Ryan Ruff, your moderator. Of course, I've got Homer, our private wealth advisor, standing by. We're going to be jumping into another wealth management related discussion, and we've got a timely one for you today. We're diving into a conversation here just on the heels of the 2024 presidential election and the results, with President Trump winning that election. Naturally, Homer, his team, they're getting bombarded with questions and concerns, comments, the whole nine yards about what this will ultimately mean for their financial world and some of the planning and decisions that go into the future for them. So today we're going to dive into some of those commonly asked questions that everybody's looking for answers for, and of course get Homer and his team's take on the matter. But before we get into the nitty gritty of it all, let's go ahead and say hi to Homer. Homer, good to see you today. How you doing?
Hey, Ryan, good to see you as well. First, just want to, make a comment that, I know elections can be, highly emotional events and particularly the last few have been pretty highly charged. And so the goal today is definitely not to get into, some of the more highly charged political areas around the election, really to focus on, how this might impact your finances and really try to stay really focused on that. So looking forward to the topic. I know a lot of our clients have a lot of questions around that and what this Trump presidency might mean for all of that. So looking forward to diving in, at least related to that part of the discussion.
Sure thing. So let's start at the high level, kind of a more immediate thing, if you will, that happened just following the election. And that was, we saw a pretty large response, Homer, from the stock market and other asset classes. Was this a surprising response in your eyes? What would you have expected given the results?
Yeah, for me, it wasn't a big surprise, from the performance of the stock market since the election, that it's up. If you look at the last two elections, 2016, 2020 presidential elections, the market rebounded pretty significantly post-election. What I think was more surprising this time is that what didn't follow the same pattern was that there wasn't any sort of a meaningful pullback or meaningful volatility heading into the elections. If we look back at 2016 and 2020, we actually saw the market down, I think in both years, over 10% leading into the election around all the uncertainty. And so I think a lot of people took some chips off the table, just not really sure how, whether it was a Trump presidency or a Biden presidency was going to play out and what might come from that. People just took some chips off the table. And so once the elections were known and once there was a clear winner, people piled back into the market and drove the market higher for the rest of the year. What we've seen so far is we've definitely seen the market up in the last week since the election based on when we're filming this. But we've also started to see it kind of flatten out in the last couple trading sessions and not have the same momentum it did the first time. And so, perhaps it's just simply because we didn't see a big drop before the election. We're not going to see as big of a jump in the market post the elections. On that, we're actually going to get quite a bit more into the weeds on what we think might be coming with the markets and the economy in a very specific video on that. And, particularly around like maybe what industries or what sectors might benefit more from a Trump presidency. But so far, no, not surprised. And I think we still anticipate that overall, there'll be a continued lift in the market through the rest of this year, maybe even into the beginning of next year.
All right. Appreciate that overview there, Homer. I want to pull that thread a little further. Homer, from what's already been announced following the election, what major changes are you seeing in some policies that you expect to see kind of a ripple effect from a wealth management perspective that would make somebody think about, hey, maybe I need to move my X's and my Y's in this direction, and any sort of policy changes from a wealth management perspective that are piquing your interest?
I think beyond investments, which again, we're going to have a very specific video on our views on that coming up shortly. I think the biggest area that many people talk about related to wealth management and particularly, private business owners, which we deal with quite a bit, is the impact on taxes and what's going to be coming in a Trump presidency around taxes. And I think our what's clear, and we'll get into some of the weeds of it, is the goal of Trump and the administration is to make permanent a lot of the tax laws and changes they made back in 2017. And by permanent, meaning that there's just not going to be a sunset attached to them like there was last time. And I think what's really important to all of that is in order for them to be able to make those changes, they need to be able to have control of not only obviously the presidency, but the House and the Senate in order to move their positions through without having to make significant compromises. And that appears to be at least how it's going to be the outcome, at least from everything we're seeing so far. So in terms of why that's also important is, at least from what we've seen the last few elections, presidential elections, is that if the president and their party also has control of the Senate and the House, so kind of all three governing bodies, usually in the midterm elections, at least one of those, the House or the Senate, is often overturned from majority control by the same party to the other side. And so then limits their ability to make these changes. And so what we also anticipate is not only are they going to try to make these tax cuts from previous tax bills permanent, they're going to try to do it relatively quickly before they lose control of all of those groups. So what do we think is going to be on the top of the list? Again, I think what we expect from an income tax perspective is some of the key changes they made in 2017 to be made permanent, or at least, again, not have a sunset to them. So one of those would be the 199A, or Qualified Business Income Deduction for flow-through entities. And this is basically for qualified entities. Not every business qualifies for this, but there's a 20% deduction on the income for those flow-through businesses that was created in that 2017 tax bill. In addition to that, we were hearing things on the corporate tax rate. So it was lowered from 28% to 21% in that last tax bill. We're actually hearing that the Trump administration may be pushing for a drop in the corporate tax rate for C corporations to 15% from 21%. So that would be a pretty meaningful drop in taxes from a corporate tax standpoint. We've heard lots of other things as well. Trump made a lot of promises on the campaign trail around tips being non-taxable. He's also talked about certain professions like first responders not having to pay taxes on some or all of their income, as well as even looking at things like Social Security and not requiring income taxes to be paid on Social Security. So there's a number of changes that, again, we've heard on the campaign trail. We'll just see, if those make it into the actual part of what is proposed by the administration. I think there's another big one that, at least for our clients, that could be potentially pretty impactful, and that's around opportunity zones. I haven't seen a whole lot on this yet in the conversations around what proposals might be coming. But right now, the way the opportunity zone structure works is that the deferral period ends at the end of 2026. And those taxes are due in April of 2027 on any assets and taxes that have been owed that have been deferred into an opportunity zone structure. What we know is that there's and just quickly, opportunity zones, effectively each state got to identify certain areas that they designated as these opportunity zones to try to attract capital in to revitalize, improve, rebuild certain areas of their states and cities. And it's been a pretty successful program attracting dollars in. And so there's been a lot of conversation that deferral period may be extended, which will be very positive in terms of those that have already done it, but also those that are considering it that maybe aren't as interested because that deferral period is going to be so much shorter, might create a lot more additional capital flowing into those areas. So those would be, I'd say, from the income tax standpoint, some of the big areas that we're watching and that are likely to be at least proposed shortly after Trump comes into office.
No, that was great, Homer. Appreciate that kind of breakdown there from the income tax perspective. You had said a word there that we've talked about a lot on this show, and that's sunset. So let's double click into that for specifically surrounding estate planning. I know you and your team, you have a lot of estate planning related conversations with clients, and we've even talked about it on this show that there's a big sunsetting of estate tax exemptions coming here down the pipeline, registered for the end of 2025. Talk me through what the Trump victory means for these. Are you hearing any rumblings of this date might change? Anything like that?
Yeah, to your point, we've been spending the last couple of years with every client that would be impacted, walking them through, when the current estate tax exemption level sunset, how that might impact them. So just a quick refresher on that. At the end of this year, it's already been announced that the exemption level will go up a little bit, and the lifetime gift and estate tax exemption will now be about 14 million per person. So a married couple would be as high as about 28 million. If no changes are made, that sunsets and gets cut in about half at the end of 2025. So those exemptions will drop to about 7 million. So in order to take advantage of the higher exemption amount, you can gift before they change, and you effectively get to capture that higher exemption amount. With the Trump victory, we're already hearing, just like the other 2017 tax changes that were made under Trump and his previous administration, that the extension of this larger exemption is likely to be a part of what they are going to propose. So rather than it dropping back to 7 million, likely to stay at the $14 million level and then continue to increase with inflation adjustments, again, at least until it's changed by another future administration. So we're anticipating that's going to be a part of the tax package that's proposed, which is great for those that have been holding off and not really sure if they were going to make any significant changes. What it really impacts are those families who are in that range in between the 14 and 28 million or so of net worth, that trying to capture those exemptions could have created a lot of inflexibility in their planning to try to take advantage of those higher amounts. Now they don't have to worry about it. So you don't have to get overly complex in the federal estate planning, at least for now, estates that are going to be under 28 million. Again, we'll see if that goes through, but I'm pretty sure that was, is pretty high on the list of parts of the tax code that they're looking to extend in the new administration.
That's great. Homer, anytime a bunch of tax cuts are made, there's always the question of, okay, well, how are we going to pay for that? Where's that going to be made up in other areas? So, Homer, from what you guys are hearing, how will the Trump administration's plan kind of make up for some of these tax cuts you just laid out for us?
Yeah, I think there's a lot of fear out there that, with all of these tax cuts and dollars flowing back into individuals' hands, that we could see a couple of things. One, how are we going to pay for all this? But two, could it create additional inflation, and how is that going to be combated as well? And so we'll leave the inflation kind of discussion for another day. We might touch on it as we go through, how we're going to pay for all of this. But there's, from what I'm reading and seeing, there's going to be a couple of ways that they're going to try to run the numbers to cover the cost effectively of reducing taxes on at least the budget for the government. One of them, in the math that they will create looking forward in future 5-10 year periods, is that by lowering taxes across the board in all of these different areas, that it will help spur more economic growth, which means that total revenues for businesses and total income for individuals will be up, which leads to more taxes coming in, even though the rates might be lower. Again, there's certain people that believe that math works, others that don't, but I think that's going to be one major part of the Congressional Budget Office justifying these tax cuts, is that it's going to create some level of additional economic growth versus what was previously budgeted for. The second area, which was a huge part of Trump's campaign, is tariffs. And so Trump is right now advising that across the board, depending on what product it is and what imports are coming in, is a 10 to 20% tariff across the board for all incoming imports on goods, services, whatever it might be. And then particularly for China, a 60% tariff on goods coming from China. And so I think that's a big part of how they anticipate they'll pay for all of these other tax cuts. Again, I think a lot of the argument, though, or the risks or concerns around tariffs is that if we raise tariffs too much, all it's going to do is raise the price of all goods and create more goods inflation, which can be a challenge. Again, it's been a long time since tariffs were a significant part of the economic policy of the U.S. I'd say in more recent years, it's been more as a tax for whether it's punishing another country for something that the U.S. deemed to not be politically aligned with our beliefs, or as a tit for tat. If another country put tariffs on our goods, we might put tariffs on theirs. So maybe a little smaller overall program and very, very specific. This sounds like it's more of an across the board policy. So it's been long enough that it's yet to be seen or undetermined how that impact will be across the board in terms of how much money it will actually raise, and then what impact that might have on the price of goods that we have. We're such a we import so much of the goods that we consume, and so it likely will have a significant impact. We just don't know, of course, what all that will mean just yet. So lots of changes coming, based on at least the proposals that have been put out there.
Homer, appreciate you peeling back the curtain there a little bit because yes, we have heard President Trump talk about tariffs quite a bit on his campaign trail. But Homer, kind of in closing, there's a lot going on politically, socially, economically in a time like this, and it can be hard for anybody out there to kind of wrap their head around it all and what it means for themselves, their family, their future as a whole. So Homer, how do you walk through these challenges and navigate, some of the mist, if you will, but also some of the real finite points that exist out there that should be considered? How do you help people navigate these major changes?
Yeah, it's a great question. I think one thing I've always been good at, throughout my career. I mean, I started my career the week of 9/11, 2001. I started my management career right as the .com, or right as the global financial crisis was starting. Restarted my business and made some major changes right before COVID hit. And so I'm, very used to in my entire career helping clients quiet the noise that's surrounding them with everything happening, and really just help them focus on what's most important for them and their family. I'd say, what we're known for, more than anything else, is helping our successful families and business owners navigate life's most challenging, important, and complex transitions. And, all of the things that we're going to be dealing with, whether it's tax law changes and how those might impact their goals for their estate planning or maybe selling their business. Our goal and how we help our clients navigate these transitions is really to help them create more clarity and more certainty around those transitions so that they can make smart decisions for what makes most sense for them. So we're just going to continue doing the same thing we've always done for our clients, and be able to help them take a step back and, again, really just focus on what's most important for them and their families, their values, and help them build a plan around that to get them the outcomes that they want.
I love it, Homer. I'm sure there's a contingency of folks listening or watching today's episode that aren't necessarily, let's say, clients of yours, but they're hearing what you're saying, and that sounds pretty nice in a time where we've got so much uncertainty going on. What would be the best way somebody could reach out to you and your team just to open up a dialogue, start a conversation, and talk through what might make sense for them?
Yeah, I think that's a great point. And one thing that we do, for every new client or new potential client that we meet with, is we'll do a full financial review of your entire financial picture to identify, what are the gaps, what are the opportunities, how are potential tax law changes going to impact you and your family, so that we can help take away, again, some of that uncertainty, some of the chaos surrounding you. So again, whether or not it makes sense for us to work together, you're at least going to know, are you on track? Are these changes going to make a significant impact on your ability to still get you the outcomes that you want? What's this going to mean for you and your family? So, would love for you to reach out, come to our website, set up a meeting, and hey, let's just see if there's something here that, it might be just from a quick phone call, like, hey, everything's okay. At least financially, this isn't going to have a significant impact on you. And, you're going to be able to focus your energy on other areas. Or it might be, hey, based on some of these changes, there might be some changes you want to make in your business or your timelines for certain goals, whether positive or, even potentially negative, that are important to identify now, and start to be proactive on making those changes. So yeah, happy to spend that time and walk through that with anybody that wants to set up a meeting.
Fantastic. Well, Homer, I appreciate you and your time. I know you got clients to serve, so I'll let you get back to doing that. But thanks again for the time today. A lot of good stuff to cover after, of course, the presidential election. But looking forward to the next one we get to be together on.
Sounds good, Ryan. Really appreciate it.
Of course, of course. And look, folks, as we typically do on this show, we want to make sure we take a moment and thank you for making us a part of your day. If you enjoyed today's discussion, if you learned a thing or two, make sure you hit the subscribe button on whichever platform you checked us out on today so that you don't miss out on any future conversations where Homer and I break down different wealth management topics, or we welcome on some of the esteemed guests from Homer's professional network and leverage some of their experience and expertise, of course, here on this show. We've got a lot of good content coming down the pipeline for you guys. We'd hate to have you miss out on any of that. Before Homer, I'm Ryan. We're going to go ahead and say so long now, but we appreciate you stopping by and being with us on Advance Your Wealth.